Hey, what's up, fam? Welcome back to the channel where we're going to dissect the latest financial trends, once again, breaking them up into bite-sized pieces that even your grandmother could understand. Today, we're diving into something shiny and precious. And no, it's not Joe Biden's dentures, it's gold. Yes, you heard it right. We're talking about how gold is making a comeback as the global reserve currency. So buckle up, grab your popcorn, and let's dig into why gold might soon dethrone the almighty U.S. dollar. Now, we all know that the U.S. dollar has been the global reserve currency for ages. It's been the kingpin, the big cheese, the Biden of currencies, just hanging on despite everything that's going on. Here's the kicker. A new analysis shows that gold is actually the money that every central bank wants to hold. So let's break this down, unpack this, and see why gold, like this one right here, is making such a splash. I know, it sounds crazy right now, right? It sounds crazy, but let's break it down. First off, let's talk about the myth that gold is a perpetual correction. Up until gold opened up for trading in New York today, most analysts would have agreed with that sentiment. But guess what? Gold is gaining ground faster than Joe Biden losing his train of thought mid-sentence. And all jokes aside, look at this chart. Check that out. Higher highs and higher lows. This isn't just a fluke. If today's gains hold, we might just see gold pulling out of its slump. In the last half of May, gold took a nosedive, which made a lot of gold bugs, but not me, pretty gloomy. And just like Biden tried to remember what state he's in, gold has shown it can bounce back. Now, let's gore another ox here. Historically, gold has been the reserve asset of choice, and that's right. Before the 1900s, gold was the go-to for international reserves, not the US dollar. It's like finding out your grandpa was a rock star before settling into his cardigan-wearing ways. Central banks were hoarding gold like it was the last piece of chocolate cake at a family reunion, and that's still happening right now. So what changed? Why did the dollar take over? Well, let's not kid ourselves. The U.S. leveraged its economic might in a little something called Bretton Woods. After World War II, the U.S. dollar was pegged to gold, and other currencies were pegged to the dollar. It was like a financial pyramid scheme, but it only worked for a little while. And then came 1971, when Tricky Dick Nixon took the dollar off the gold standard, and suddenly, the dollar was just a piece of paper backed by the promise of the U.S. government. We all know how reliable the government promises are, kind of like Biden promising he'll run for re-election. I don't see that happening. How can this man go? He just pooped his pants. Fast forward to today. The tables are turning. Oh, yes, they are. Percentage holdings of the dollar in international reserves are dropping faster than Biden's approval ratings. One major reason for this shift is America's tendency to weaponize the dollar. Sanctions and financial warfare, especially after Russia's invasion of Ukraine in 2022, have made other countries wary of holding too many dollars. In response, the central banks worldwide are buying gold like it's the last roll of toilet paper during the pandemic. This gold rush is a big factor driving the current bull market in gold. Central banks are hedging their bets against the volatility of the dollar and the geopolitical risks that come with it. Times are changing, my friends. And just like how we all wish that Joe Biden would change his teleprompter habits, central banks are shifting the reserves back to gold. Why? Because gold doesn't rely on a government's promise, doesn't get printed willy-nilly, and most importantly, doesn't make gaffes on live television. No, it does not. Look at this. Countries like China, Russia, and India are leading the charge, increasing their gold reserves significantly. They're not just buying gold, they're hoarding it. They're hoarders right now. It's like they're prepping for a financial apocalypse. And who can blame them? With the dollar's dominance under threat, gold offers a stable yet reliable alternative. So what does this mean for the average Joe, or should I say the average investor? Let's not get Joe Biden back into this once again. Well, if central banks are hoarding gold, it might be a good idea to consider adding some of that gold to your portfolio. Greg and I did. I'll talk about that in a second. Precious metals like gold and silver tend to hold their value better during turbulence, things that are bad, scary in the world. And we're seeing a lot of that lately. And there's an election coming up. Plus, they're hedged against inflation, which is more persistent these days than a politician's promises. Inflation is like that annoying house guest that just won't leave, and gold is your escape plan. By investing in gold, you're protecting your wealth from the erosive effects of inflation. In conclusion, while the US dollar is not going anywhere overnight, gold is steadily clawing back in its place as the global reserve asset. So whether you're a seasoned investor or just someone looking out there for shiny options like gold, it might be time to look into that and diversify your portfolio. Now, as I mentioned earlier, Greg and I hold gold and silver, and it's in our most important asset we hold. That is our retirement portfolio. There's a link below if you want to do the same. We've added a couple companies. Take a quiz. You'll match up with one of them. Fill out a form. No obligations, just a free eye-opening report on how you could add it to your portfolio, doing basically nothing other than clicking a couple of DocuSigns. It's super easy. And if the U.S. stock economy tanks, mutual funds go down, and everything else goes to all chaotic hell, you've got that in there, which can save you. Look at the charts from 2006 and onward. It saved many, many people. I was not one of those people, but I learned from it. That's why I started buying gold and silver and putting it in my portfolio. Again, in my most important nest egg, which is my retirement. So investing in silver and gold can give you exposure to both precious metals without breaking the bank. You can start with as little as $5,000. So what's the takeaway here? Main takeaway here is diversify your investments. Don't put all your eggs in one basket, unless that basket's made of gold or silver. No, I'm just kidding. I wouldn't do that. Stocks, bonds, real estate, precious metals, have a little exposure to all, maybe even some crypto. They've all got a place in a balanced portfolio. Especially in these uncertain times, having a little bit of gold and silver just might be your ticket to financial stability while everything else just goes. That's it for today, folks. Please like, subscribe, and I will catch you in the next video.